Looking forward to our time today with you. I appreciate you taking the time to come and out of your busy schedule and to walk through a program or an introduction to a program around building business acumen to grow your sales. Love this topic. Love the idea of how do we help sales individuals move from that kind of sales professional to a business leader, to truly understand not only your company that they're providing products or services, or they're selling your products or services, but also the customers they're working with. So looking forward to spending your time. Grateful to have Ron here with us as we kind of walk through this. As he said, we'll be using the chat box, so make sure you have that open and make sure it's set to send to everyone. That's where we'll kind of be connecting today as we get going. In fact, just to make sure we're comfortable using that in the chat box, just go ahead and put where you're calling in from. Could be a city, could be a state, a country, might even be a location in your home, as we're still maybe hybrid models. Some of us may still be working from home. I hope nobody is from struggling with the heat in Europe today. Hopefully, if you are, you got a nice fan next to you as we get going today. Myself and Ron, we're just south of Salt Lake City, Utah, in a place called Orem, Utah. Our claim to fame, I guess, I like to share is we had a chance to host the Winter Olympics in 2002. So great area, and we're feeling the heat as well. Not as bad as what we're seeing in Europe for sure. Well, welcome to our time today. We got about an hour. We're going to walk through some concepts. And my goal today is to provide you something that is very usable, something you could take back individually and apply. But also, if you're coming from a sales enablement role, or maybe you're a VP of sales and you're trying to understand how can business acumen really differentiate my organization, my goal is to give you a basic framework and some tools that hopefully will spark enough interest that you want more, to be able to say, how can I really use this to change the ways my sales process works in my organization? So with that in mind, let me go ahead and just advance slide here. And I want to start by asking this question: what is business acumen? And you come into a course on building business acumen for sales professionals. What is it we mean by that? Well, here at Acumen Learning, we've been in business for 20 years, and we focus purely on this topic of business and financial acumen. It's a topic we love. We're kind of that inch wide, but a mile deep. We look at not only what most people think of when you think business acumen is the financial statements, but we look at the strategies of a company. Look at what are the external factors impacting the business, along with the strategies to help kind of make a business case. What is it we're trying to do? Why are we doing it? How we can execute on it? In fact, for purposes of our workshops, as we train on this, about 1,000 sessions a year with many great companies, in fact, 30 of the Fortune 50, is this definition here. It's an understanding of how your company makes money and making good decisions around the money-making process. Now, of course, with that definition in mind, we would, of course, expect that our CEOs of our companies would have a business acumen, would we not? That's highly expected of them, right? Not only that, we'd expect our leaders to have business or financial acumen, to understand how your company makes money and then make good decisions around the money-making process. That being said, we work with many great companies, and many of our companies will have thousands, tens of thousands, even hundreds of thousands of employees. If you think about in business, who really impacts the bottom line? Is it the C-suite? Is it the VPs, the directors? In the end, more often than not, it's the employees. Our experience in over 20 years of focusing on this topic is the value of an employee understands how their company makes money and then making good decisions. What we find is our senior leaders of all organizations, your organization, the customers you're selling into, is doing everything they can to squeeze a dollar out of the financial statements, increase profitability, generate greater cash flows for the organization, get value back to shareholders. In the end, who really impacts this? It's the employees. What we find for our employees is you're functionally brilliant. If you're in a sales role, you know more about selling your products or services than I would ever understand. That being said, we tend to kind of go through our careers a little myopic. We got blinders on, right? Very focused on maybe my customer, maybe the individual products I'm selling. Well, what building business acumen for your sales organization, it helps them to step back, get that big picture perspective. They move from sales leaders or sales reps to business leaders who happen to sell. And that's the transition that we think we provide through our training on helping your sales organization understand business better. So as they're working with your customers, be able to become that trusted partner, get a seat at the table. So of course, we think the best salespeople have business acumen. And it's not just an understanding, as you see here, of how your company makes money, but it's actually an understanding of how your customers make money. And then your role as a sales individual is to help them make good decisions around the money-making process. Meaning, can you help them make the business case how your products or services will drive to what their executive team is trying to accomplish? That's absolutely what we're trying to do. Now, of course, the challenge with that is there's so many dynamics that go on in business, are there not? You think about where we're at today, July of 2020. We're dealing with supply chain issues. We're dealing with high inflation. We're dealing with increase in cost around borrowing money. We're dealing with talent gaps where companies are trying to hire and they can't get enough employees to provide the products or service they're trying to do. It's definitely a very dynamic environment. So how do we kind of use this concept and get better at? I can't think of a better time to have business acumen and as a sales organization to truly understand your customers, what they're trying to do, and how your products or services will drive to their result is absolutely what we're trying to do here. I've got a video clip, but I just realized I don't know the audio is going to come through. I forgot to test it. This is a video. I'll kind of speak to it. This is the Colbert Report. He talks about all the changes that have happened in the telecommunications space. They talk about how AT&T originally controlled all of telecommunication. Then they kind of brought it all together, and then they pull it apart. In the end, the outcome of that is AT&T is still here, still a big player in North America as a big player. And all the adaptations of companies coming in and coming out, combination of companies, separating companies over time. In the end, dynamic, right? You think about today in the telecommunications space. We remember the day when AT&T was the only one who had the iPhone. Boy, that became a real advantage to them. Today, though, we don't really care what carrier we have. Now, of course, we talk about the benefits of maybe a Verizon and their network, et cetera. But for most consumers today, we've totally changed the way we think about communication from our cell phones. We're not worried about a certain brand. We're worried more about the cost, right? So these changes that happen, you think about the pandemic, how it impacted the oil and gas industry when oil actually became negative, where they're actually paying people to take the barrels because they didn't have any place to put it. Or you think about the travel industry, how it got devastated. Boeing was impacted significantly through COVID as all of a sudden nobody was flying. This topic of business financial acumen is absolutely valuable for individuals. It's absolutely valuable for leaders, but it's pivotal, vitally important, extremely important for sales organizations. What we find, an interesting kind of thing, you think about how good are sales individuals of understanding their customers' business. Well, there's a study that was done by the Forrester research organization, and they basically, what they did is they went in and they interviewed both sellers, those who were selling the products or services, and then buyers, okay? And this was specifically around leaders within the organization, that interaction between a sales individual and maybe a director, VP, or even the C-suite. And they asked the question, how would you grade yourself on your performance in those meetings, how much knowledge you have about their business, et cetera. So one of the questions they asked, what letter grade did the sellers give? In the chat box, any guesses to what they gave, what the sellers thought? So I'm selling into what A, B, C, D, or F. What would you guess? Versus the buyers. What was the buyers saying? What letter grade do you think the buyers gave themselves? So those that are buying it versus those that were selling. Of course, sellers, maybe the high. Buyers, Jake is saying, well, maybe a D, I don't know. Well, here's the outcome. Sellers gave themselves a B. So it wasn't quite the A. They weren't that kind of confident. They realized there's ways to improve. But this is an interesting statistic. Buyers gave the sellers an F. Here's one quote. I just pulled one quote from it. Their products or services were lobbed over the wall. They didn't connect to what our organization was trying to do, what my business strategy was, and what I valued in the course of a normal day. Folks, this is that gap that we're trying to help fill. We're trying to help sales individuals to truly understand the organization's strategy, be able to understand kind of what they're trying to do as a business. And then rather than just toss it over a wall, be able to help them make a business case how your products or services will really drive that results. If you're looking for sales methodology, we're probably not the right company. If you're looking for a certain platform, you probably have a great CRM already. We're not doing that. The differentiator that we provide is help your sales individuals truly understand the customers they're selling in, understand what they're trying to do, what their strategy is, and how your product or service drive towards those results. That's what this is all about. So with that in mind, I want to give you just a high level of a simple framework. I'm going to give you 5 fundamental drivers every company focuses on to kind of build our business acumen for everybody on the phone call today. In addition to that, I want to give you 5 lessons. So what are your takeaways? What are the things you can do and how you can apply this with your sales team? So the 5 drivers I'm going to talk about, the first one's going to be about cash. I'm going to introduce you to 2 fundamental metrics every company focuses on and how you can impact them. I then want to talk about profitability, a second fundamental driver every company's focused on. This is probably the one you'll hear more about as you think about or talk about your customers. Understand the basics of how you think about the key metrics around, and again, how your partnership can drive towards profitability metrics for your customers. We'll talk a little bit about the assets of a company and what we call asset strength versus asset utilization. We'll wrap up with growth and then people, understanding how a company's growing, what they're trying to grow, and how your product or service can drive towards that growth, and then be able to understand how to work better, how to sell into your customers, understanding what their pain points are, etc. So that in mind, that's where we want to go. Let's start with the cash driver. As we talk about cash in business, there's a famous quote, cash is, fill in the blank, if you would. Grab your chat box. Cash is, what would you put there? King, absolutely royalty. In fact, Ram Charan says it's a company's oxygen supply. Think about that. If a company runs out of cash, what's going to happen? They're dead. They're going to die, right? So absolutely important to make sure they have cash. In fact, it's so important that Al Shugart, former CEO of Seagate, said this: cash is more important than somebody's mother. Now, I don't know who he's talking to, but I don't know that I agree with that, but it is vitally important in business. And what you'll find is if your customer base is dealing with cash issues, that's going to impact how you sell, or you got to really make that case. Otherwise, they're not going to spend a dollar. Think about it in your personal life. If all of a sudden you were to lose your job, you're going to be more cautious in how you spend your money, right? Or if you just invested, you just bought a home, so you made a big investment, you're not going to have as much discretionary cash as you make that big investment available to make additional purchases. So cash is vitally important in business, and something as a sales individual, understand what their cash position is, and kind of how much they generate, and what their goals are around their cash spending, their capital budgeting, etc., will be vitally important. So let me introduce 2 types of metrics that are often talked about in business. The first one, we're going to call it cash position. In fact, another term I'll put in the chat box is just cash and cash equivalents. Oh, I think I spelled that wrong. It's not supposed to be equivalence there. Sorry about that. My fingers don't spell correctly here. So it's cash and cash equivalents, the financial statement. What is it? When you think about their cash position, they'll talk about cash on hand, cash and cash equivalent. I want you to think of a savings account. In fact, if you're taking any notes, I jot that down. When they talk about their cash position, cash on hand, liquidity, they're often referring to this account called cash and cash equivalent, and it represents kind of a savings account. Now, we all have savings account. What's the purpose of our savings account? Well, it's a place where I put money for future investments, right? If I love motorcycles, maybe I want to buy a new motorcycle. So I can put money down, so eventually I have money to be able to put a down payment on that motorcycle, right? So it's a place for future investment. Obviously, it's a rainy day fund, right? Many of us deal with this. If a car breaks down, all of a sudden they're charging you $450 to fix your car. We don't have a monthly budget of $450, right? So we have these funds set aside for future investment, for unexpected expenses as well. That's exactly what the cash and cash equivalent account is for your customers. Now, for a privately held company, you're never going to hear it. They're not going to tell you their cash position. That being said, they will talk about cash. They'll talk about where they're wanting to invest, capital budgeting. They'll talk about capital expenses. They'll talk about investments in new products, new services, etc. If they're talking that way, that's pretty good sign that they're interested in possibly partnering with you. Now, if they're all talking about holding on to cash, going through the pandemic, for example, Boeing borrowed $42 billion to stay alive. So they're not going to be looking to invest a bunch of that money in new projects because in the short term, they're trying to survive a pandemic. So you look at this cash position as a metric of kind of where they're at and where they're thinking of spending some money. In addition to that, the second metric they'll talk about is what we call cash flow. The actual accounting term is called cash flow from operations. Cash flow from operations. Now, on a cash position, what do you think investors want this to do? Do they want it to go up? Do they want it to go down? Or it kind of depends. What would you think? The cash they hold in their savings account. For a publicly traded company, as an investor, do you want them just to hold on to the cash for future investments? What would you guess? This would be the participatory part of our experience. Ron's kind of saying this balance between both. Think about that. You want your company just hold on to cash. Now, of course, in an inflationary perspective, where we got 9-10% inflationary, every day you have it sitting there, it's not going anywhere, right? Hold on to the cash for future investments. Yeah, so they may want to hold on to it for future, but as an investor, the real question is, what's the strategy? They don't want it to, you'll often see a cash position of a company kind of doing something like this. Why? Because in the end, investors don't want it just sitting in a savings account, right? You're not getting much of a return. The expectation is they want you to take that, invest it in your business, and or get it back to them by paying them dividends, buying back stock, etc. So this account will go up and down based upon strategy. The second account, though, cash flow from operations, you want that to be going up every single month, every quarter, every year. Now, this represents the difference between all the cash that comes into your business in a given period of time, minus the cash that goes out from your business in that same period of time. And it's really focused around the core operations of your business. So in AT&T, for example, the cash they generate from all the network access, all the phones that they sell, all the accessories that comes in, actual cash dollars that comes in a period of time, minus all the cash that they took to run the business during that period of time, that represents your cash flow. Now, of course, where cash and cash equivalent, that kind of goes up or down. This one, every month, every quarter, every year, investors want to see that go up. So those are the two metrics company. In fact, this metric right here, cash flow, is probably one of the most important. If you talk to Warren Buffett, that great investor from Berkshire Hathaway, he would say the number one number he looks at when he goes to invest in a company is their cash flow from operations. Is it positive and is it growing is what he's looking for. So the question might be, how do we think about cash as we're selling into an organization? First of all, that cash position or cash equivalent. What do you want to talk about there is how does your product or service deliver more business value versus them just holding on to it for future investment? That's the case you're trying to make, right? Should I take this money, hold on to it for future investment, or should I spend it with you because you're helping me drive towards my strategic objective? You're helping, you know what I'm trying to do, and you're helping me to execute around that. That's when they talk cash position, that's what you're trying to do. If they've got strong cash flow, what are some of the considerations to think of? Number one, if they've got a strong cash flow or they're generating a lot of cash, that the positive of that is a stronger likelihood they have budget dollars to invest in your products or services. The challenge is sometimes the reason they have great cash flow is they're very tight in what they're spending. Think of that as kind of the Ebenezer screws example, right? I'm holding on to the cash. I'm not willing to deploy it. So you may have to overcome some of those hurdles. And again, it goes back to this. Can you really deliver, because your product or service really deliver more business value than holding on to it and or spending it somewhere else, getting it back to investors, paying down debt, etc. Now, if they have weak cash flow, they're not generating very much, they're having a hard time generating that cash, what's the positive? Well, you got an opportunity. If you can show how your product or service is going to increase their cash generation, increase their cash position, obviously they're going to be interested in that. The challenge, of course, of that is if they have a weak cash flow generation, they're less likely to have budget dollars to spend with you. So the final question is, you think about cash and your customers. Answer this question. How would a partnership with your company positively impact your customers' cash and cash flow? That's what you want to be thinking about. You want to listen to what they're communicating. As you're talking to their customer, they talk about cash position, they're talking about liquidity, they're talking about, hey, budgets, they're talking about reducing costs. All these drive towards eventual impacts on cash. So folks, that's the cash driver, the first driver that companies focus around. Let's jump to the second driver. That's profitability. When you look at profitability, this is probably the one that gets most time and attention. If you listen to your customers, they're going to talk about profitability quite often. They'll talk about operating profit, gross profit, net profit. They'll talk about EBIT, EBITDA. They'll talk about margin. These are all profitability metrics. Now, don't worry, you don't have to jot all those down. We'll give you some basics as we go through this. So I love this quote from Sir Richard Branson, the CEO of Virgin Enterprises. He was asked this question: what talent came late to you in life you wish you had possessed earlier? And his answer, if you know him, he's very much an adrenaline junkie CEO. He loves very active. He says, number one would be surfing and kite surfing. I wish I figured that out earlier on in my life. The second was the difference and knowing the difference between gross and net. Gross revenue versus net revenue. Gross profit versus net profit. Understanding those key profitability metrics, what he kind of highlights here. Well, as you look at it, let me give you the lesson. I just want to walk you through the basics of a P&L. Now, again, don't worry. I'm not trying to make you the CFO, but I want to walk you through the basics here. So if you look at the S&P 500 on average, by the way, these are 2019 numbers. Why am I doing 2019? We've been through a heck of a period of time over the last 2 years. A lot of things changed, so the numbers are a little skewed. But if you look at kind of a common practice, on average, what would you see on the S&P 500? For every $100,000 they generate in revenue, on average, S&P 500 would generate about $55 of direct costs of providing their products or service. We call that term cost of goods sold. You may have heard that. Sometimes they refer to it as COGS. All you want to remember as you think about that is the direct cost of providing your products or services. So for AT&T, going back to that example, it's the network costs. All the costs of running the network, you're going to take that fee out. Obviously, if you go into a retail store and you're getting a cell phone from them, that whatever their cost was for that cell phone or any of their other merchandise, you're going to take those direct costs. Direct labor around those costs also would be included. You take that out, that gets gross profit. By the way, some terms I want you to remember, I'll put them in the chat box. Profit is the same thing as income, which is also the same thing as earnings. So these terms are synonymous in business. So don't get confused about them saying gross profit or gross earnings or gross income. They're all the same thing. You take that out, for every $100,000, you're generating about $45,000 of gross profit. If you want to get the margin, when they talk about margin, all you're going to do is take this number right here. You're going to divide it by total revenue. So all margin is a percent of revenue. You can put that in your notes. So that says for every $100 a company brings in, they generate about $45 of profitability. You take out your other costs, selling expense, general administrative. Sometimes they refer to that as overhead. You take that out, plus a little depreciation and amortization, you get to what they call operating income. Sometimes referred to as EBITDA. For extra credit points in chat box, tell me what EBIT stands for. I'll give you the hint. E is earnings. Put the rest of it in there. What does EBIT stand for? Now, this becomes a key metric for many companies. This represents the profitability from their core operations. It's their operating profit. That's the term, operating income, operating profit. Investors want to know how profitable is a company from their core operations. This is what the production groups, what the company itself can control. So for every $100, that's about $18. About $18 or $18,000, I guess, for every $100,000 of EBIT profit. Looks like a couple of you have that. Earnings before interest and taxes is the term there. Absolutely. Which means if this is earnings, income, or profit before I take out my interest expense and taxes, what do I have to take out next to get to my bottom line? Interest and taxes, about $5, about 21% tax bracket here in North America, which gives you a net income, net earnings of about $13 or 13%. Now, if I want to improve that margin, there's two levers I can do. Any guesses as to what I can do? One, I'm going to increase something, a line item here. The other is I'm going to decrease something. Any guesses to what allows us to grow this? If I want to make that margin, I want to see that increase. What are the levers I have to increase that? Thank you, Stacy. Absolutely, increase sales. And we've got a sales group. Absolutely, we want to increase this one right here. There's two ways I can do that. One is I can charge more, just increase my price, right? So anything I can do to increase price. The other is I sell more, what we call volume. Those become key levers as you think about increasing profitability. The second thing we want to do is we want to reduce our costs. Now, whether it be the direct cost that Michelle kind of said, decrease the cost of goods sold. It could be any of these expenses. Reduce any of these expenses, you're going to have a positive. So this, I want to increase my revenue or sales. By the way, those are synonymous terms. So increase my revenue or decrease my cost. Those are the levers I have. Now, what you'll find is some companies have higher margins than 13%. Some have lower margins. So let's talk about companies with higher versus lower margins. And I've got a list of companies. What I have here is I have the net incomes of 8 companies. On the right-hand side, you'll see those companies. Hopefully, you recognize their logos. Of course, you've got Amazon, Apple, Pfizer, Facebook, Walmart, Exxon, Volkswagen, and MasterCard. Now, in order to get a high margin, if you think about revenue and expenses, in order to get a high margin, I can charge a premium price in relationship to what it costs me to provide that product. If I can charge a very high price, the uniqueness of my product, I can charge a high price in relationship to what it costs me, I get a high margin. Now, in the end, if it's a commoditized product, basically what it costs me to get access to it or produce it versus what I can charge is very thin, you're going to get low margins. So here's my question. Looking at these, which company do you think is right here? For every $100 they brought into their company, it's more than 3 times the S&P 500 net income margin. Which of these companies on the right do you think fit that? For every $100 they generate in revenue, they generate $46 of profit. Take all their expenses out, that's what's left over. Any guesses as you look at these here? Which ones do you think would go to the top? Again, how would I get to this? Think about what they can charge versus what it costs them, the uniqueness of their products. Any companies come to mind, high margin companies? Let me get to my new message. Looks like MasterCard, Apple. Okay, we got some good examples. Yes, those that said MasterCard, you're spot on. It's MasterCard. Why? What is MasterCard selling? MasterCard has an infrastructure. They're connecting buyers and sellers through an electronic transaction fee. What's interesting about this is MasterCard as well as Visa, they don't actually finance it. That's why if you have a MasterCard or you have a Visa, you'll notice it has some bank. It's connected to some bank. Wells Fargo, Chase, Citibank, etc. They are just the connection point. They charge 2.5% to 3% on every transaction that happens. Now, the big uniqueness to them, it's global. If you're in Paris, France today and you want to use a credit card, if you have a MasterCard or a Visa, they're going to take it. You bring American Express, you may not be able to use that. You bring other cards from your countries, you may not be able to use that. So the uniqueness is their broad network of access. All the companies that use MasterCard, which allows consumers to buy products from them. Those of you that said Apple, it is one of the top ones. Here's the rest here. You got Facebook, Pfizer, and Apple, all high margins. Versus low margins. Any guesses to what the lowest? We got Amazon, we got Walmart, Exxon, or Volkswagen. Any guesses to what is the lowest margin? This one right down here. Let's see what we've got in my chat box. Looks like Walmart, Amazon, right there. Here we go. It is Walmart. Now, interesting enough, Amazon's number's higher than it normally is. Walmart and Amazon are usually right close to each other. These are actually 2021 results. One of the big benefits is Amazon had tremendous growth, tremendous success during 2020 and 2021. Why? It's called a pandemic. We all started shopping online. Well, many of us were already shopping online, but those that weren't started shopping online, and they got a better margin in 2021 than they normally do. But why the low margins? In the end, what is Walmart selling? It's commoditized products. You don't want to go pay a premium for the milk you're going to buy at Walmart. You're looking for a low cost. You're buying things, that commodity-based products, you're not expecting to pay a premium. So in the end, that's why they're getting a low margin. Now, my question is, do you think that Walmart should be aspiring for a greater margin, net profit margin? Maybe aspiring to what an Apple has? Well, no. One is not good and one is not bad. Meaning these guys, MasterCard, they're incredibly much better than a Walmart. It's more about what your business model is. The more unique I am, I'm very focused on that uniqueness, and I want to maximize that return I'm getting. If I'm selling commoditized product, unique, non-unique, commercial, commoditized products, I'm not going to get high margins. So this is all about efficiency and effectiveness. So the thing you want to take away from a sales perspective, if I'm selling into high margin companies, I need to be thinking about how can my products or services really maintain or increase the uniqueness of their brand, uniqueness of their products or services. If I'm selling to the commoditized organization, it's all about how this helps us to be more efficient, more effective, reduce costs. It's all about that efficiency. For example, for Walmart, if you're selling your products in a Walmart, not only are you giving them significant discounts, they may even come back to you and say, hey, you got to change your packaging. I want you to repackage it this way so I can get more products on my shelf. So it's very much an efficiency thing for those organizations. So, which has the greater impact? You talk about this growing revenue versus decrease in cost. Which has the greatest impact on the bottom line? An increase of sales by $100,000 or reducing the cost by $100,000. Anybody want to take a stab at that? Do you think of those two levers, which has the greatest impact on the bottom line? Increasing sales or reducing costs? What would you guess? Which has the greatest impact right down here? And you might say, hey, it has the same impact. So reduce costs, getting some of those. Anybody want to weigh in on, we've got a whole sales organization. Anybody want to weigh in on sales? Well, here we go. Let's start right here. Let's start with the increase. So I increased my sales by $100,000, or you could even say $100, right? Remember, we talked about the direct cost of providing that product or service. I still have that direct cost. That's not going to change. If I want to sell more widgets, I sell more widgets, $100,000, I'm going to have $55,000 of expense against those widgets. Well, my assumption is by selling $100,000 of new product, I don't have to hire a bunch of new people, new infrastructure, et cetera. So I'm going to skip that. You might actually have a little bit of selling costs, but I kind of avoided that. Gets down to an EBIT or an operating profit about $45,000. You take out your interest and taxes, ends up being about $36,000. Now, you may debate in your individual company what that direct cost. If it's a tech company, that cost could be relatively low. Think of the Microsoft. Think of some of these software, Google, how much it costs to add a new ad. It's relatively small. But in the end, you're going to have whatever that cost is, you got to take that out. Versus a reduction of cost. Well, if I reduce my cost of goods sold, let's say, by the way, it doesn't have to be there. It could be right here, overhead cost, other places that we can impact that. Brings us to $100,000 of operating income. Take out my tax, gets me to $79,000. So all of you that said decreased costs has the biggest impact, you're absolutely correct. So the answer for long-term sustainability of a company is to cut, maybe cut, right? No, that's not the answer to it. In fact, if you continue to cut costs, eventually, what are you going to impact? The quality of your products, the customer relationship. In the end, you got to balance these. You want to grow your sales while reducing your costs. One of the reasons I like to share this is as you're selling into customers, every single company you're selling into is going to have some sort of cost management perspective. And if you can show how your products or services decrease costs, they'll love that because it's really easy for them to make a case around that. In the end, though, the difference between increasing sales, reducing costs on the S&P 500 numbers, right, on average, for $100,000 of sales, about $36,000 of profitability versus 79, about a 2 times difference. So what are your takeaways around profitability? Number one, get clear on what your customer's key profitability metric is. Is it EBIT? Is it gross profit? Is it operating profit? Is it EBITDA, another metric they talk about? Figure out what that is, understand what that is, and be able to speak to how your products or service either drive revenue or reduce costs to help improve those numbers. Remember that idea of 100 up, 100 down, $100,000 increase in sales versus a reduction of costs, which has a greater impact. And understand what they're focused on. If they're really focused on driving the top line, how does your product or service help to drive the top line? Create that uniqueness, create increased demand for their products or services. If it's all about the cost reduction, how does your product or service help reduce costs? And then finally, the last part is if you're not unique, you better be cheap and sell a whole lot more of them is kind of the quote there. But the idea is, how does your product or service help to impact their margins? Again, going back to those 2 levers. So the question around profitability, how would a partnership with your company positively impact your customers' profitability? Imagine if every one of your sales individuals was thinking that as they go into their conversations, as they're listening or to the customers they're talking about. What are they focused on? They're talking about cash, profit, maybe it's assets, maybe it's growth, maybe it's people. And how does a partnership with us really drive towards those results? That's the differentiator that Business Acumen will add to your sales team. Well, let's jump to the asset driver. When we look at asset driver, we're talking about anything you own or control which has values. You think about in your business, what is it your company's own or control? That's what businesses are talking about. There's 2 kind of levers that companies think about around their assets. One they call asset strength. The other is called asset utilization. So let me quickly define those. Asset strength represents the ability to stay viable during the ups and downs. Really what you're talking about there is how financially strong are they? The easiest way to think about this, think about in your personal life. How financially strong are you? Well, if I'm a first-time home buyer and I just barely bought my home this last week or whatever, and I only put 3% down, obviously I got 97% of the cost of that house as debt. So if all of a sudden I lose my job, I can be in a tough position if I don't have savings or other things there. Versus if I've owned my home for 15 of my 30-year note, I've really paid a significant amount. Maybe I've even paid extra. I'm in a strong financial position. If I lose my job, I can borrow against my assets, my home in the case of the house example. If I have assets that I own, I can sell those. That's what we mean by financial strength. Now, in business, companies want to balance. They want to be financially strong, but the idea is to leverage your assets to grow your business. So you're always going to have a bit of liability against those assets, particularly in publicly traded companies. Now, if you're selling to privately held, that's all based upon the leaders. Leaders maybe want to be debt free. In that case, they have strong asset strength, but their utilization may not be as strong. The utilization side of the coin is about the ability to efficiently and effectively use your assets to generate profit. In fact, if you're taking any notes, what I would say next to asset strength, I'd say, what do you have that allows you to create strength, financial strength in your business, versus how do you use, put the word use, how do you utilize or use the assets to generate greater profitability? That's the balance companies will focus on. And if they're a publicly traded company, there's all sorts of metric analysts and investors are looking at to say, are they in a strong financial position or are they in weak? Of course, strong financial position, just like you or I, strong financial position gives us better credit ratings when we go borrow money. It's the same thing with a publicly traded company. If they're in a stronger financial position, their access to cash is much easier versus a company that's struggling to survive. Let me give you a couple examples where companies kind of looked at the balance of both asset strength versus asset utilization. The first one is Microsoft. In 2016, we're all familiar with Microsoft carries a lot of cash. They have about $100 billion of cash in 2016 on their balance sheet. In fact, that was about what they generated in revenue. And it's just sitting in their savings account on their balance sheet, right? Well, investors were saying, come on, where are you going to invest that? How are you going to use that? You're not really utilizing if it's just sitting in your savings account. So what did they do? In that same year, they purchased LinkedIn for $26.2 billion. Now, all of a sudden, I'm going from $100 billion of cash. I buy a whole nother asset that can now generate greater profitability, synergies, the companies working together, et cetera. So that's an example of a company that had very strong asset strength, but wanted to utilize those assets in a better way. They bought a company. Here's another example you may have heard of. How many have heard the story of UPS inventing a navigation process to avoid left-hand turns? This is a famous, if you want to look it up, there's a little 15-minute video that talks through it. This is all about drivers and technologists coming together saying, we got to be more efficient in what we do. How we use our asset, we can use it more efficiently, which in the end, what does that do? It built their asset strength of the company. By avoiding left-hand turns, restructuring their routes to avoid left-hand turns here in North America, maybe different in other countries, UK in particular. UPS shaves 20.4 million miles off their routes. So of course, what does that do? Reduce about, I think it's 3 million gallons of fuel reduction, if I remember right. Pretty significant impacts to the bottom line. So in business, it's all about what do I have and how do I use what I have? As you're thinking about from a sales perspective, what should you think about? Well, what do I use? How do I utilize what I have? How can your products or services, first of all, get into service and up to speed quicker? If you got some new technology, some new innovation you're bringing to your company, the sooner it gets into usage, the greater they're going to get. They're going to start getting the benefits or the returns from that. So from an asset utilization, one of the ROIs they're looking at is how quickly can your product or service have an impact on our business? The second thing to think about from a sales perspective, how does your product or service help extend the life of their company? Either their strategy, their business itself, if it's equipment, how long it can extend the life of the manufacturing process they have in place, et cetera. So another key lever to think about is how does your product or service extend the life of the products or services of your customers? Number 3, increase your product or service revenues and benefits. How does your product or service drive towards greater revenue, greater profitability in the organization? And then finally, reduce your products or service total cost of ownership. Again, stuff like extending the life of the asset means I'm getting more value out of this longer as I use it as an organization. So definitely those are the key levers that companies are focused on from an asset perspective. Now, before I jump into the growth drivers, let me just kind of hit one quick concept. If you come to our Building Business Acumen for Sales Professionals program, the foundation of these first 3 drivers are the 3 financial statements. So if you understand what's going on, if you want to understand what's going on from a cash perspective for your customer, you're going to look at the cash flow statement. If you want to understand what's going on from a profitability, you're going to look at what's called the P&L, also known as statement of income, income statement, statement of operation, et cetera. That's probably the one most common that companies talk about, think about. And then, of course, the last one is going to be the balance sheet. So in the program, we actually cover not just the 5 drivers, but how to look at these statements and assess what's going on with your customers. So then as you have the conversations, be able to articulate how your product service will drive towards their key business outcomes. Well, of course, growth is not anything new to any of us. We always know the importance of our customers wanting to grow their success as a business. When we look at growth perspective, I love this example from Alcoa. Anybody happen to know what Alcoa, or have ever heard of the company Alcoa, what they do? If you do, put it in the chat box. Alcoa was trying to grow their business, okay? They wanted to grow their business, and rather than just go into their customers and say, hey, buy more of our product or service, they said, how can I help you grow, which in turn helps us grow? Anybody happen to know what Alcoa does? What they produce? It's aluminum. They're an aluminum manufacturing company. There you go. Thank you. Aluminum manufacturing company. So in 1999, Alcoa is trying to help their customers, those that buy a lot of aluminum, grow their business. And in return, the expectation they'd see huge growth in their business. So in spring of 1999, Alcoa put a refrigerator in the middle of a hotel conference room. It had all sorts of engineers, had marketing, some of their customers came. And here's what they were trying to answer. The whole question was around, what's the optimal amount of cans to have in a refrigerator to get the greatest uses? Now, for some of you date yourself, have a little silver hair like me and Ron, you're going to remember that back in the day, they had these little 6-packs that had these little plastic things that were environmentally unfriendly. And so companies started to go to the case. You remember the case? It was like 24 cans of whatever your favorite beverage was. Nobody would take that 24 can and set it in the bottom of their fridge. It took up a whole level within their fridge. So what happened? You put it in your pantry, maybe put 5 or 6 in the fridge. And invariably, if you're like me and my kids, somebody drinks the last one, doesn't put it in there. So I put some in and wait for them to get cold before I drink them. So the whole idea was, what's the optimal packaging to be able to put in a refrigerator where it maximizes the usage, keeps it cool, et cetera, and makes it easier for consumers, which in the end helps make success for their customer. The outcome of this is the fridge pack. If you want to look this up, do a search on fridge pack and its creation. You'll notice Alcoa was a key player in that. The first year of that happening, Coca-Cola increased their sales by 10%. Any guesses to what happened to Alcoa? I love that example because it gives us this example of a company seeking the benefit of their customer, which then drives their business. Folks, that's what this business acumen is all about. Imagine your sales individual. It's not just about the selling of your product or service. They're truly trying to be a solution provider for your customer. How that differentiates them. When the companies we do this course with, the feedback we get is employees are saying, their customers saying, how do you know so much about our business? Wow, I can actually see how that will drive the results. They switch from being a sales individual to a trusted partner who's helping to create solutions for their company. Here's another example of growth. The first example is growing the top line. Here's another example. How did American Airlines save $1.2 million in fuel costs per year? This is a cost reduction. Was it with more direct flights, with more fuel efficient planes, or with iPads? Some of you may have heard this. It's the iPad. They had a 35-pound pilot bag they had to put on every single plane. And so they switched it, put it all into iPads. Just by making that switch every year, it reduced their fuel cost by $1.2 million. What you'll notice is, as you think about growth and how you can impact the growth of your customer, it kind of goes back to what I call Business 101. It's that increased revenue, reduced cost. So I can increase their top line like an Alcoa, which has a positive impact on our customer, which in return helps us succeed. I can also do what you saw Apple do, which was to reduce their cost, right? They were able to provide an iPad, which then in the end reduced $1.2 million. They paid the cost of those iPads off very quickly. As you think about a $1.2 million cost reduction every year from a fuel change that they did. As you think about growth, that's what it's all about. How do you drive towards greater profitability, increasing revenue, reducing costs? How does our products or services really get to that? You can either drive that top line growth or the bottom line growth, or both. If you can do both, that's the best position to be in. Be able to speak to that and articulate how your product or service drives both their top line and bottom line growth, and you'll be in business. They'll listen to you. They'll be interested in your products or services. Well, last driver I want to hit on before we wrap up today is that of the people driver. Now, you'll notice people's in the center. It's not happenstance, it's there. We would suggest you the core of any business is people. Now, how should we think about that from a sales perspective? Number one is, if you can anticipate your customers' needs, you will always have products or services that your customers are interested in. Think of companies that anticipate your needs, whether it be Apple with the iPhone, the smartphones. When they came out in 2007, all the key carriers, key phone manufacturers at the time, Nokia, BlackBerry, laughed at them, thought that would never change the way we do business or how we think about business. Of course, it's been revolutionary as you think about that. The other thing is think about who you're selling into. This people drivers, who am I selling into? Am I selling to a senior finance leader? Well, they're going to focus around these 5 drivers a little different than maybe an operator or an engineer. Understanding who I'm selling into is also a way to think about the people driver from a sales perspective. Well, I love this example as you think about anticipating customer need. This is Henry Ford. If I would have asked my customer what they wanted, they would have said a faster horse. Henry Ford figured out a way to do something that people didn't even realize that they wanted. I love this example. Here is the 1909 New York Easter Parade. As you look at that, you see a bunch of people. Of course, you see a number of horse-drawn vehicles, etc. If you really zoom in, right here and right here, you'll actually see the Model T. This was in 1904, as you just start to see automobiles being manufactured, right, here in North America. They had been manufactured before, but really starting to see some momentum around them. Now, we go from, what was the year again? 1904 to 1913. Same Easter Day parade and vehicles everywhere. In fact, it's hard. I think right here, if I look at it closer, I think right there might be a horse-drawn carriage. But that transition, that ability to anticipate, if you're good at that, man, you will always have a product or service customers want and need. Challenge is most of us aren't as good at that. I love this example of renting videos versus streaming videos. Then Blockbuster, Netflix. Netflix anticipated where a market was going, and Blockbuster didn't believe them. Of course, the outcome of that, we remember cash is king. It's an auction supply. Blockbuster goes into bankruptcy. Netflix excels until now. Anybody happen to see the most recent report? Lost 900,000 customers. What's happened? What is the next anticipation that Netflix has to make to stay in business would be a question for them to focus. Boy, if you have products or services that helps them, I'd be knocking on their doors today. Of course, you got other examples, Kodak, Polaroid. I love this example as you think about the smartphone. Here you have Tiger Woods teeing off earlier on in his career and then later in his career. Just look at all the phones up there. That's what we're talking about, anticipation. So how do I get better at it? Here's a couple things. You might take a snapshot of this. Identify who your most vital or important customer is right now. Then ask 3 questions. What's your customer most want or need from you? How would your customer rate you on your performance? And finally, what 2 things can you do to improve your rating? That fundamental process, by the way, it's a customer service analysis. We do this all the time with our external customer. My comment is to do it internally and to do it with the customers you're selling into. Where are they focused on? Who am I selling into? What are they really driving to? How does the executive communication, the strategies the executives are focused on, how does the individual who I'm selling into align with those executive strategies? What can I do to help them get greater alignment? Those are the types of questions to ask as a sales individual. Well, folks, that's the 5-driver model. What do we know now? We understand the difference between the basic cash on hand or cash position and cash flow. And anything we can do to drive cash performance is a positive for our customers. We understand the basic measures of the P&L and how you can impact those results. We understand the importance of balancing asset strength versus asset utilization. We also understand the importance of driving towards both top line and bottom line growth within your customers. And finally, the ability to anticipate customer needs. In the end, what would I say? The key takeaway, if a sales individual can begin to focus not just on your products and services, but understand their customer's business, how they make money, and ask the question, how's a partnership with our company drive our customers' cash, profit, asset growth, and people strategies? That's the differentiator. That takes you from a sales individual to a partner with your customers. With that in the end, I want everybody to get an A. Next, when your executives, when we ask them the question, how well do your sales individuals do when they come? I want them to say it's an A. They understood my company. They understood what I was doing and the strategies, and they helped me see how their products or services could drive toward the results. In the end, they became a trusted partner for my company. Well, folks, that's the end of our presentation right now. We got a few questions we're going to answer. I'll turn it back to you, Ron.
Hey, Brent, thank you so much for spending some time with us today. And those that are on here, if you have a question or two, please feel free to ask that in the chat box. I have a quick question, and then I'll get a question that Mitch just asked here. Brent, we've been doing this for 20 years. This is our 20-year anniversary. What's an aha moment that you or maybe a member of your facilitation team have seen over the years of training this content to sales reps?
I think one of the aha moments originally when we started this program, we did our core program, Building Business Acumen, and we happened to have sales leaders who would come into our program, and they loved it because we're teaching them to understand their company. But many of them started to say, "Well, wait, it's not just understanding my company; it's understanding our customers." So a few years back, we created we took our flagship program and redesigned it around the idea of sales professionals. How to think about this as I'm talking to my customers, and that's the differentiator. Everybody has great sales methodology. Everybody has tools to help them sell. But to the point of the Forrester report, how many of them sales individuals truly understand what their customer's trying to focus on and then can help them make the business case? You're the experts on your product or service. Now imagine I've got an expert helping me communicate to my senior leadership why a partnership with them would drive results. That's the real aha moment, is to see leaders walking away from those meetings saying, why didn't I have this 20 years ago? Being able to say, my customers are asking me, how come I know so much about this product, their company, more than I even know? It's been a huge value for our customers to see that, and definitely an aha for us. Why didn't we figure that out earlier and make that a key part of our offerings would probably be an aha.
Thank you so much. Mitch has a two-part question. Number one, if I'm selling into a privately held organization, how does that differ than if I have a company that's publicly traded? And then the second part of that is wanting to create that compelling event in situations where they may not want to share their privately held information with us.
Yeah, often we work with companies. Majority of our companies are publicly held, but we have a large contingent or group that are privately held. And there's a number of things. Number one is just having that simple framework. So as you're talking with them, if I'm just, rather than thinking about what does their business do, just saying, hey, are they talking about cash, profit, asset growth, or people? Just by using that simple framework, I can just glean in my conversation, my qualifying conversations. What are you really focused on today? What are some of your goals and objectives? Well, we have a big cost reduction in it. Okay, profitability. In the end, we're looking at our capital budget. We got a real slim cap. Okay, cash is a big focus. I can glean that type of stuff. The other place is there's a lot of information out on the web today to access. So if it's a privately held, couple things that I do. Number one, I'll look for a publicly traded company in the same focused industry. So if it's an insurance company that's privately held, I'll look at a publicly traded insurance company. What you'll find is the metrics and measures are very similar. You'll understand that I can draw from that. I'll also look at their website. Look at what sometimes they'll have kind of an about us, or sometimes they'll even have a little kind of strategy stock or an annual report where they kind of highlight some of the successes of what they do. As much information as I can gather, then when I'm having the conversation, I'm listening. I'm asking the questions that really draw. What are the challenges you're focused on? I'm hearing in the industry, this is a focus that they're looking at. How does that impact what you're focused on, et cetera, is a great way to do that. And by the way, as you do that work, it kind of gets a little bit to that second question, is the more they can tell you understand what they're focused on, the more you're speaking their language, their terms or metrics, the more willingness they are to open up and share more. If I understand what you're talking about, for example, in the medical space, payers, healthcare companies, they talk about stuff like medical expense ratios. They talk about operating expense ratios. If I can articulate that on average, here's what I'm seeing in publicly traded companies. What are you driving towards, et cetera? Yeah, well, our percent, we want to be a little bit higher than that percent or a little bit lower. It gives me some ability to kind of hear with that. So I think a bit of it is just looking at your customer through their business mind and having that framework is a simple way to gather that. Other things you can do to kind of get a more compelling event, giving them a chance to try your products. Obviously, many of you guys do that. Demoing is a great way to get confidence. White papers or other things, give them that confidence to say, hey, yeah, I want to listen to this group. These guys are expert in what we want to do. I don't know if that answers your question, Mitch. Let me know if there's something else we can answer.
But what you're describing there is becoming a business partner is not just a sales rep, right, in that whole process.
Yeah, I gave you the one thing was an aha. The second aha is that partnership role. I remember owning my own company. I was working on this major online training experience. I'd never done it. Had some designers that were helping me. And I ended up connecting with an individual. His name's Richard Voss. And at the time, he knew what I was trying to do. He knew how to do it. He'd done it before. it was like an answer to my prayer, so to speak. I was like, oh, I finally have somebody who could do that. All of a sudden, I don't even remember what his company's name was, but I still remember Richard Voss, and he was a sales individual, right? So that ability to truly become that partner, once they know you understand what they're trying to do, you can speak to their strategies, what they're trying to accomplish. All of a sudden, you're no longer, a sales individual. You're a partner on their team. You're helping them create solutions for the organization. So absolutely vital. And I think that's what business acumen differentiates. There's all sorts of methodologies that are out there, but the core of, I think, of what this does for a sales individual, more confidence as they go to the conversations, ability to really understand what they're doing and then say, here's absolutely how our product can drive towards those results. And as an individual buying a product with that confidence and knowing that you know what we're trying to do, all of a sudden, you're my number one. That's the one I want to talk to. That's the one I'm going to pitch. In fact, you might even help me make the pitch. So that's a big aha experience as well, Ron.
Awesome. It's kind of a nice segue into my next question for you, Brent, is in enterprise sales, our leadership in our sales organizations around the planet, the teams we work with, they're trying to get to that higher level in the organization, the one that actually will sign the check or manages the budget or owns the budget. As I prepare for that conversation with that individual in the organization, what are some tips or some key things you would suggest we do in preparation for calls like that to come off and to be that partner?
Yeah, probably the number one thing is wisdom. You're going to do the homework to know a lot of stuff. And sometimes as a sales individual, I get excited. Oh, I know your EBITDA is up 10% and your return on capital employed is this. And they're like, whoa, what are you talking about? So the wisdom to do the research, to do a quick review of their financial, I would look at the top and bottom line. Are they growing their revenue and bottom line profitability? I'd probably listen to or try and read any sort of communication they might have if it's a publicly traded company. If it's non-publicly traded, try and see if I can figure out any sort of strategy that they're focused on. Then have it in the back of your mind and have it a normal and natural conversation. Sometimes we feel like I've got to kind of make a case, and I've been on calls where I and even some of my colleagues have spent so much time trying to show how smart we are, which actually kind of derailed the conversation. So the wisdom and the preparation is absolutely understand as much as you can about their key strategies, understand as much as you can around their key metrics, have it in the back of the mind, and normally through your conversation, be able to share, hey, I was noticing you talked about this cost reduction initiative, that $10 million reduction over the next 5 years. How does that impact your organization? Versus, oh, hey, by the way, I noticed you got this. And it's just making it a normal, natural conversation, and the wisdom to know when do I kind of insert it versus when do I just, in the end, they want to feel like you're truly interested. And just because I prep and I can share how much I know about the company is not necessarily the differentiator. When I can have a great conversation where they sense and feel and know that I'm interested in what they're trying to accomplish and then be able to articulate how our product or service can help them with it, all of a sudden, like I said, it's a normal, natural conversation for them. So that would probably be my thoughts. Does that answer the question?
Thank you. Yes. The very last question I have, Brent, and there's some new participants that may be unfamiliar with how we deliver our training content around the planet. And obviously, over the last few years, things have changed dramatically with COVID and so forth. What are some of the training modalities that we would typically deliver our content to sales organizations?
Absolutely. So we were doing virtual before virtual was cool. Our business, about a third of our business before COVID was virtual. We have many clients that they do virtual training. So we understand the learning methodology, the adult learning theories, experiential activities. Rather than to try and force fit a live experience into a virtual, we've recreated the course with kind of virtual exercises in mind. So we do obviously live in person. We also do virtual instructor-led programs. We also have a self-paced online program that many clients will take that either as a foundation for the masses. In some cases, it might be a pre-work before they go to an actual live instructor, whether it be virtual or face-to-face program as well. So there's multiple ways in which we do. Not only that, is Business Acumen is not just a one-time event. So we have a year-long follow-up program that allows an individual to take the material and continue to come back with, which includes stuff they can do on their own. But also next Wednesday, we have an earnings call lab where we give them a chance to practice using the tool by looking at various companies. Next week, I think we're doing General Mills. Last month we did Costco. So it's a great way for a learner to continue to practice using these tools. In fact, some of them may even be their customers or within their customers' industries. So our goal is not just to have an event, it's to create this long-term learning that they really become that business leader who happens to sell. Does that answer your question?
That's perfect. Thank you so much. We've pretty much hit the end of our time today, Brent. Thank you for spending the time with us to educate us today. We appreciate everybody's participation in today's session. If you have any questions for us or would like to reach out to us, I put in the chat box our URL as well as a number to reach us. Thanks again for your time today. And we're going to hang on for a couple more minutes. Should you have any other questions, please put them in the chat box. Thank you for participating today, everyone.
For anybody who stays on, one of the questions might be, why would I want to do this for my team? And I think the biggest thing, it just really creates that confidence in that partnership. And absolutely, we've worked with many great sales organizations, and they see this as a huge part of their strategy moving forward. So they continue with it. Every new hire, as they move throughout the organization, gets a level of business acumen to continue to enhance, one, their understanding of their own company, but two, be able to get better with understanding their customers' company. So a huge value add there for sure.
Thank you. Okay, I'm not seeing any other questions in the chat box. So thanks everyone for your time. Have a great day.
Thank you. See you.
Bye.